Hello, friends. Right now, millions of seniors across America are paying bills every single month that they are legally not required to pay. Not because the law changed recently, not because there's a new program they haven't heard of, but because nobody at SSA, nobody at Medicare, nobody at the billing office ever sat down and said, wait, you're exempt from this. And the most frustrating part? The exemptions are real. They are written into federal and state law. They apply to you right now. But they are not automatic. Nobody activates them for you. Nobody sends you a letter saying, congratulations, you no longer owe this. You have to know they exist, and you have to claim them yourself. Today I'm going to give you all 5. If you are a senior on Social Security, on Medicare, or on a fixed income, at least 2 or 3 of these apply to you directly. And by the end of this video, you'll know exactly which ones, exactly how to claim them, and exactly how much money you could be putting back in your pocket every single month. Before I get into the 5 bills, if you are not subscribed to this channel, please do that right now and turn on the bell notification. Here's why it genuinely matters. The rules around Social Security, Medicare, and senior benefits change constantly. And when they change, the agencies involved do not send you a personal explanation. They update the policy and expect you to already know. What I do on this channel is take those changes, break them down by what they actually mean for your specific situation, and get that information to you before the deadlines pass and before the mistakes are already made. The people subscribed here find out in time. The ones who aren't tend to find out after the wrong payment, after the missed exemption, after the money is already gone. Hit subscribe, turn on the bell, and let's get into the 5 bills. Bill number 1. Medicare Part B premium surcharges. Most seniors on Medicare are paying $185 a month for Part B. That is the standard 2026 premium. But a significant number of seniors are paying far more than that, and they don't know why, and more importantly, they don't know they can fight it. Here is what is happening. Medicare calculates your Part B premium based on your income, but not your income right now. They use your tax return from 2 years ago. So if your income was higher in 2023 or 2024 due to a one-time event, a home sale, a Roth conversion, an inheritance, a large withdrawal from a retirement account, Medicare is still charging you extra based on that number today in 2026. This extra charge is called IRMAA, the Income-Related Monthly Adjustment Amount, and it is not small. IRMAA surcharges range from an extra $70 per month all the way up to nearly $500 per month on top of your standard premium. That means some seniors are paying over $600 a month just for Medicare Part B, based on income they earned 2 years ago from a transaction that will never happen again. The exemption exists. It is called a life-changing event appeal, and the form is SSA 44. If your income has dropped significantly due to retirement, loss of a spouse, divorce, loss of income-producing property, or reduction in work hours, you can file SSA 44 and request that Medicare recalculate your premium using your current income instead of the 2-year-old number. Here is what to do. Go to ssa.gov, search for Form SSA 44, download it, fill it out with documentation of your current income, and submit it to your local SSA office. Processing typically takes 30 to 60 days. If approved, your premium drops immediately in the following month. If you are currently paying more than $185 a month for Medicare Part B and your income has dropped since 2023, this appeal is free, it is legal, and there is no downside to filing it. Bill number 2, property taxes. This one affects millions of seniors and is one of the most underclaimed exemptions in the entire country. Every state in the United States offers some form of property tax relief for seniors. In most states, if you are over 65 and your income falls below a certain threshold, you are eligible for a significant reduction, sometimes 25%, sometimes 50%. In some cases, a complete freeze that prevents your taxes from ever going up again, regardless of what happens to property values. The problem is that these exemptions are not automatic. Your county assessor's office does not look at your age and income and reduce your bill. You have to apply. You have to submit the paperwork. And in most counties, there is an annual deadline, typically in the spring, by which your application must be filed for the current tax year. Here is what to do. Go to your county assessor's website or call their office directly and ask 2 specific questions. First, what senior property tax exemptions are available in this county? Second, what is the application deadline for the current year? Bring your Social Security award letter, your most recent tax return, and a copy of your property deed. In many counties, a senior on Social Security income alone qualifies automatically. One application can save you hundreds or in some cases thousands of dollars per year, and once approved, many of these exemptions renew automatically. Bill number 3. Utility bills, the LIHEAP and LIPIC programs. If you are on a fixed income and you are paying full price for your gas, electric, or heating bill every month, there is a very strong chance you are paying more than you are legally required to pay. The Low-Income Home Energy Assistance Program, known as LIHEAP, is a federally funded program that helps eligible households cover the cost of heating and cooling. Seniors on Social Security income frequently qualify. The assistance can come as a direct payment to your utility company, a credit on your account, or in some states, a complete waiver of certain charges during high usage months. Separately, most major utility companies are required by state regulation to offer reduced rate programs for low-income seniors. These are called by different names depending on your state: LIPIC, REACH, HEAP, senior discount rate, but the structure is similar. If your income is at or below a certain level, your monthly utility bill is reduced by a fixed percentage, typically 20 to 35%, automatically applied every month once you are enrolled. Here is what to do. Call your gas or electric company directly and ask this specific question. What low-income or senior discount programs do you offer, and how do I apply? Then go to liheap.acf.hh.gov to find your state's LIHEAP office and submit an application. Income limits vary by state, but in most cases, a household where Social Security is the primary income source will qualify. The application is free. The savings are immediate. And in most programs, once you are enrolled, you stay enrolled as long as your income remains within the qualifying range. Bill number 4, prescription drug costs. This is the one that surprises people the most, because most seniors assume that once they have Medicare Part D, they are getting the best available price on their medications. That assumption is costing millions of seniors significant money every single month. Here's what most people do not know. Medicare Part D has a program called Extra Help, also known as the Low-Income Subsidy, that can reduce your prescription drug costs to nearly zero. We are talking about copays as low as $1 to $4 per prescription for generic drugs and $10 or less for brand name drugs. No deductible, no coverage gap, just dramatically reduced costs on every prescription you fill, every month, for the entire year. In 2026, if your individual income is below approximately $22,000 per year, or your joint household income is below approximately $30,000, you likely qualify for Extra Help. And here's the part that should make you angry. SSA automatically enrolls some people, but not everyone who qualifies. Millions of eligible seniors are paying full Part D copays right now because they were never auto-enrolled and nobody told them to apply. Here is what to do. Call SSA directly at 1-800-772-113 and ask them to check whether you are currently receiving the Extra Help subsidy on your Part D plan. If you are not, ask them to process an application over the phone. It takes about 15 minutes. Alternatively, go to ssa.gov and apply online. If approved, the subsidy is applied to your Part D plan immediately in the following month. On a typical prescription regimen, this can save $100 to $300 per month or more. Bill number 5, federal income tax on Social Security benefits. This last one is not a bill you receive. It is a deduction that quietly reduces your Social Security income every year at tax time. And a significant number of seniors are paying it when they do not have to, or are paying more of it than the law requires. Here is how it works. Up to 85% of your Social Security benefits can be subject to federal income tax, but only if your combined income exceeds certain thresholds. Combined income is defined as your adjusted gross income plus non-taxable interest plus half of your Social Security benefits. If that total is below $25,000 for a single filer or $32,000 for a married couple filing jointly, none of your Social Security benefits are taxable. Zero. If your combined income is between $25,000 and $34,000 for single filers, only up to 50% of your benefits may be taxable, not 85%. The problem is that many seniors are either filing incorrectly, using tax software that is not optimized for Social Security income, or not taking all available deductions that would bring their combined income below the threshold. And some are paying state income tax on their Social Security benefits when their state does not tax Social Security at all. Here is what to do. First, check whether your state taxes Social Security income. As of 2026, more than 40 states either fully exempt Social Security benefits from state income tax or offer significant deductions for seniors. If you are in one of those states and your tax preparer is including Social Security in your state taxable income, that is an error. Second, calculate your combined income using the IRS AIRB formula and compare it against the federal thresholds. If you are close to the 50% threshold versus the 85% threshold, adjusting certain withdrawals or income timing strategies can make a real difference. If you are not working with a tax professional who understands Social Security income specifically, this is worth one consultation. The savings can be $1,000 to $3,000 per year or more, depending on your situation. Let me bring this together before you go. Bill number 1, Medicare Part B IRMAA surcharge. If you are paying more than $185 a month for Part B and your income has dropped, file Form SA-44 and appeal the surcharge. It is free to file and can save you up to $500 per month. Bill number 2, property taxes. Contact your county assessor's office and ask about senior exemptions before this year's deadline. One application can save you hundreds to thousands of dollars annually. Bill number 3, utility bills. Call your gas and electric company and ask about senior discount programs. Apply for LIHEAP at liheap.ef.hhs.gov. Savings of 20 to 35% on your monthly bill are common. Bill number 4, prescription drugs. Call SSA at 1-800-772-1413 and ask whether you are receiving the extra help subsidy on your Part D plan. If not, apply immediately. Savings of $100 to $300 per month or more. Bill number 5, federal and state income tax on Social Security. Verify whether your state taxes Social Security. Calculate your combined income against federal thresholds. If needed, consult a tax professional who specializes in Social Security income. None of these require a lawyer. None of them cost money to apply for. They are legal exemptions and programs that exist specifically for people in your situation. And the only reason most seniors are not using them is that nobody explained they were available. Share this video with a family member or a friend who is on Social Security right now. Not next week, today. Because every month this goes unchecked is another month of money that does not come back. Subscribe and turn on the bell. I cover these updates every single week before the deadlines hit. I'll see you in the next one.